We need to talk.
137.
It would be safe to say in the investment world, change isn't coming. It's already here.
The world has been galvanized into action. What can we do to contribute to a more equitable society?
The future belongs to those who adapt, those who identify shortcomings and unlock value.
A quantum leap was necessary.
I think you understate the situation. It isn't necessary. It's essential if we're to build any kind of a future.
We have to ask ourselves, what can we do to invest in the right places, for the right reasons? Not because it's the right thing to do, but because it's the only thing to do.
The warmest welcome to Critical Conversations brought to you by Sanlam Investments. My name is Lerato Mbele, and in this second installment of Critical Conversations, we are talking about climate change. Why? Because it affects you, it affects me, it affects humanity, and ultimately it will affect our livelihoods. Let me begin with some hard facts, and I'm going to quote from the Daily Maverick, an online publication, who in turn were quoting an international report. It said that in the last 50 years, climate-related incidents have led to 11,000 disasters in the world, 2 million deaths, and it's cost the global economy $3.6 trillion. That is the full scale of the human and the financial devastation brought about by one thing: climate change. So on this platform, what we're hoping to do today is create an opportunity to understand what the phenomenon of climate change is, to put it into perspective, to understand its human and social impact, and ultimately to see how we can be the solution through the choices we make as investors and as citizens in our countries across the world. We have an illustrious panel who are experts in the field of finance and ecology. They're going to talk us through some of the complex issues, but I don't want to have that conversation alone with them. I'd like to encourage you to join the conversation. And how you can do so is by having a conversation on your social media platforms. On Twitter, you can use the hashtag Critical Conversations. When you do so, remember to tag us on @SanlamInvest. Also on this virtual platform, you can use the Q&A functionality. You'll find it at the bottom of your screens. When you do post your questions, I'll be able to ask the panelists some of those questions. Pose as many of those questions as you will. There are no right or wrong questions. We are just here to create and foster an understanding. Let me introduce you to the panelists. First off, we have Professor Guy Midgley. He's from the University of Stellenbosch. However, he speaks to us today in his personal capacity. Guy is a distinguished professor on global change ecology with a focus on biodiversity. He's also regarded as one of the top 200 most influential climate change scientists in the world, a ranking made by Thomson Reuters. Joining us on screen from the Netherlands is Dr. Lucian Peppelenbos from Robeco. Lucian is an ESG climate strategist, and he brings us his expertise on integrating climate-related risks and opportunities, looking at how you can consider climate issues in your investment strategy today. Also joining us on screen from the United States is Ramiz Naam. Ramiz is co-chair of Energy and Environment at Singularity University. He has a diverse background, diverse interests, and today he's going to share with us his knowledge on climate change and also innovation. We want to talk about solutions as we pave the way forward. And finally, last but certainly not least, also here in studio with us is Jason Little, the head of institutional at Sanlam Investments, and he's going to be sharing with us some of the sentiments that investors have shared with him, their reactions, their responses to climate events, how to structure their plans, and also just charting a forward-thinking strategy for us into the future. This is Critical Conversations, hashtag Critical Conversations. Join that conversation. Tag us on at Sanlam Invest. And I think, without further ado, it's time for us to talk. The warmest welcome to all of you, gentlemen. Let's start off with some myths, or what experts call myths, but the fears, the concerns, the frustrations that people have at their dinner tables around this complex subject of climate change. Firstly, Guy, people say it's made up. It's not real.
Well, we can show with an enormous amount of evidence that's been collected by the scientific community for decades now that the world is warming, the atmosphere is warming, the oceans are warming. We have measurements to prove it. We can measure the rise of CO2, atmospheric CO2. We have the theory to link those two things. The evidence is incontrovertible. And there's no doubt anymore that climate change is real, and our business activities, our industrial activities are causing it.
If it's real, there's also a lot of hypocrisy. We say the world must be energy efficient, green conscious, and then you've got billionaires who launch rockets into space, releasing huge emissions. In fact, apparently the last rocket launch recently by the Amazon founder, that was enough to fuel a car for 100 years. That's how many emissions there were in that launch.
Well, we could point out a lot of hypocrisies. The global energy system as it currently is, through its pollution, is killing between 4 and 7 million people annually. Now, that's as many people have been killed by COVID. So how can we accept, why do we accept an energy system that is so damaging to human well-being? A transition into a better energy system is long overdue. And this has been hidden from us. I think we need to really expose it and work very hard to transition our energy system.
We continue with these myths, these frustrations. Lucian in the Netherlands, they say climate change is a problem brought about by rich countries and their industrial processes. Rich countries must fix it, and quite frankly, rich people can make themselves feel better by fixing it. Don't involve the rest of us.
Well, you have a fair point in the sense that industrialized countries are historically responsible for 2/3 of all emissions. And in that sense, they have the moral obligation to lead a global climate action. They should. However, emerging countries, developing countries are currently responsible for 2/3 of all emissions. And frankly, no matter where you are on the planet, we're all hit. We will all feel the impacts of climate change. So we're all part of the problem, and we need all to be part of the solution.
Did you say developing countries are also responsible for 2/3 of the problem? Apparently, it's actually the largest emissions have been, those responsible are 200 of the largest companies in the world, and those are found in Europe and the United States.
Those are 200 companies are indeed responsible for 2/3 of all industrial emissions. Many of those companies are headquartered and established in Western countries. However, they have global operations. Many of their production facilities, as well as their markets, are global. They're everywhere. So again, we're all part of this. We're all part of the problem and need to be part of the solution.
Ramiz, I'll bring you into the conversation here. They say that, climate activists always make tenuous links. They'll tell you that people need to stop eating meat because it's meat eating that's leading to methane gases that's heating up the Earth's atmosphere. How can we blame the cows for this problem?
Well, to go answer the previous question, it is undeniable that the problem we have has been caused predominantly by the global north. CO2 lingers in the atmosphere for a century. So we can't just look at what countries are emitting today. If you look at what has happened over the last 100 years, it has been Europe and the US that are responsible for the carbon that's in the atmosphere today, with China as a rising source of that. That said, there are hard areas to decarbonize. Growing meat produces carbon. Agriculture and land use are a quarter of all global carbon emissions. So we have to find solutions.
Right.
I don't think we're going to get there by telling people to not eat meat, though. We have to find a way people to eat meat in a way that doesn't produce carbon pollution. That's what we'll have to do.
And then in Southern Africa, there's the issue of, energy transitions. They're encouraging people to think about electric cars. How can we talk about electric cars when utilities like Eskom can basically provide electricity in the city?
It's a funny joke. At the same time, one of the challenges that Eskom faces is that they have no growth in sales of their product. And so I've argued to Eskom for some time that embracing electric vehicles would give them a new source of demand for electricity. And that increase in electricity sales is what allowed them to buy down their debt and become a more sustainable company. So I see electrification of transport as actually a fantastic thing for South Africa's power sector.
And Jason, context matters. We live in South Africa, 44% unemployment, growth at no more than 1.2%. There are bigger issues to consider here, and climate change can't be the priority for this kind of developmental state.
Yeah, no, Loretta, there's no doubt that the immediate consciousness is very much linked to things like unemployment and things like this, these social issues that plague us. Internationally, arguably, there's more of a climate focus. But I also want to just draw out the global risk report that was released by the World Economic Forum, wherein they actually spoke about these growing social income and wealth inequalities that existed before COVID, but also as we emerge from COVID. If we don't grow and if we don't build our society in the most inclusive way, and you throw in climate risk as an existential threat, then those things are going to widen. And so what I'm also trying to say is that these social issues and climate issues are very interconnected in how they actually function and unfold in our economy.
Can I jump in there? You said 44% unemployment. We've got a failing energy system, and we've got a climate impact looming upon us. I see an ability to solve all three problems, or at least to make a big dent in all three problems simultaneously by transforming South Africa's energy system. If we could employ millions of South Africans to build a new energy system, sort out our energy problems, and we would then be contributing to mitigating against climate change in one fell swoop. And we seem to be ignoring this as an opportunity. We have plenty of renewable energy in this country that we can convert into usable energy.
All right, what I'd like us to do now is begin at the start, as they say. And firstly, Guy, what is this climate change and why has it become a climate emergency?
Well, the warming that I was talking about translates into changing weather patterns around the world. And the way that you experience that depends on where you live. Even regionally in South Africa, we experience climate change differently. So if you're in the Western Cape, climate change means a reduction in the reliability of winter rainfall. Think day zero. If you live in Gauteng, it means the impacts of more extreme rainfall events and flash floods. Similarly in KZN, if you're in the Southern Cape or Northern Cape, it's increasing droughts and more intense droughts. Climate change affects every single aspect of our lives. It affects the way business is done. It affects supply chains. Particularly, it affects the poor because climate change impacts on the poor worst. And I'd also like to say that it's a gender issue because these negative effects tend to affect women worse than men. So climate change is a nexus of a number of very, very serious social issues.
So the prevalence of droughts, of floods, of these very unnatural weather phenomenon is as a result of the Earth's atmosphere getting warmer as a result of poor industrial processes and choices.
Correct. Yeah. So climate change is exacerbating adverse weather events. It's juicing up the climate system and making these extreme events worse. We always have had droughts. We've always had floods. But what we're finding is that their frequency is increasing and their intensity is increasing. And this is where our economic system is predicated on a certain kind of a climate. Yeah. And that system is now changing beyond those limits. And we're starting to see the real economic impacts of that. And the sooner we sort that out, the sooner we can, we can build a sustainable system.
So you heard the question I asked Lucian earlier on, is there's this view that everybody's now responsible for the solution. And yet the countries and the companies that have led to this problem are located in the industrial north, basically Europe and the United States. It is they who must commit to targets of zero emissions by 2050. It can't be the rest of the world that's still on a developmental trajectory.
Look, my view on that is that that's a tired argument. It's not really going to help us. If we hold each other to ransom, it's a zero-sum game. We're not going to win. You know, the developed world has failed to lead successfully on this issue for years, for decades. We've seen a succession of very poor American presidents not leading on this issue, getting in the way, in fact. So we can't rely on that anymore. Why can't the developing world take the bit between the teeth and build a better system for themselves? We can lead the world out of this. Why do we have to wait for them to do it? I think it's a tired argument, and we need to move beyond it.
Lucian, let's bring you into the conversation here. Two words get bandied about: adaptation, mitigation. Adaptation, mitigation. Just in terms of the strategies that can be pursued to address these problems, what's the right way to go about it, and who's doing it the best?
Well, so indeed, adaptation, mitigation. Mitigation means that we prevent further emissions and further global warming. That's basically the transformation of our economy to a net zero economy. And that, frankly, it is a huge cost and effort, but also it is the investment opportunity of our generation. Take, for example, the electrical system, the energy system. We already talked about it. Basically, we need to electrify transport, industry, buildings, a lot of parts of our economy that are currently reliant on fossil fuels. Now, to electrify all of that, we need to increase our networks, our distribution systems, storage systems, our whole entire energy network fivefold. So what we've built in say, 150 years of development, in terms of our energy system.
Right.
Now, in one generation, we need to increase it fivefold.
Right.
So that's what I see as a huge opportunity, and that's particularly an opportunity also for countries as South Africa, which is well endowed with natural resources in terms of its solar energy.
Okay. Ramiz, I'm going to bring a question in here from Shahid Peters, who says, is climate change not part of a greater design of the world nearing its end? So this kind of apocalyptic perspective. And whatever we do, we only, the questions are coming through fast and furious, we only minimize the risk towards what is inevitable.
No, I fundamentally disagree with that. If you go back to the 1970s, before there was widespread consciousness of climate change, we thought that the population bomb was going to be the end of humanity. We thought that depletion of the ozone layer was going to be the end of humanity, and dozens more. We've solved those issues in most, certainly in the US and Europe. Air quality is at an all-time high, water quality is at an all-time high. So this is another problem.
Right.
It's the biggest we've faced, but we can solve it.
Right. Jason, there's a question here. Anonymous says, why has the conversation, and I don't know if it's this conversation here or just generally an awareness in the world, but why has the conversation around climate change suddenly ramped up a notch? All of a sudden, it's everywhere.
Well, I think it's because of, one of the things I do like about this field of sustainable investing and confronting, environmental, social, and governance issues of the day is that it's all evidence-based. And I think there's a growing realization that if we are to place ourselves on a trajectory where we are going to holistically and with the right intent and purpose solve this problem, we have to actually take those steps now to put us on that right trajectory and path. And if we delay anymore, the trajectory is going to be vastly different, even if we wait 5 so years or so.
Can I come in? Let me tell you why the issue's ramped up all of a sudden. One of the reasons is that finally the developed world is starting to see some very significant adverse impacts of climate change. So developing world has been crying about the impacts of adverse effects for decades, unheard, or not much heard. But now we see heat waves in Canada.
Yeah.
We see flooding in Germany. These systems are getting caught off guard by extreme climate events. The developed world suddenly has realized that this is going to affect them as well. And believe me, they will not permit this to continue. So, if we continue as South Africa to pursue a fossil-driven system, we're going to find ourselves sitting with a stranded asset because of this.
When you say they are not going to permit, why would the rest of the world now have to subscribe to, again, another agenda set by the West?
Well,
because they finally woke up to the problem.
They haven't permitted us to shift the energy system so far. We've been subject to the adverse effects of climate change for decades because the vested interests in the fossil system have ensured that it continues. Okay. It's just the same. Where's the economic power? That's the question.
Okay, just before we get into some of those issues around global markets, what about population explosions? Why is this subject being avoided? So more and more people coming into the world, people moving into the cities, that migration of people, isn't that essentially what's putting pressure?
I think the migration of people into cities is a tremendous opportunity to clean up the system. You can make it much more efficient. Population is not the problem. It's seriously not the problem. Of course, we've got to sort out the food system and make it more sustainable. No, the problem is overconsumption and based off of a very, very dirty energy system. So if we just sort out the energy system, and the World Economic Forum has highlighted a study by Harvard University, which reviewed about 100 papers on renewable energy just a couple of years ago, and they showed that it's possible to shift the entire world's system to renewables by 2050. One of those papers looks at sub-Saharan Africa. It's possible, just beyond 2030, to shift the entire sub-Saharan African system onto renewable energy, including some energy available to desalinate seawater. So this is an opportunity. We know how to do it, and we're just not taking it.
I'm still fostering understanding here. Lizelle Stein, Rami, says, there is so much contradictory information. What is, in capital letters, the real biggest contributor to climate change?
The real biggest contributor to climate change is energy, and it's dirty energy that we use. And that comes mostly from already affluent countries and from the rising middle class. It doesn't come from the poorest people in developing countries. It does come from the rich in developing countries to some extent, and the middle class in Europe, China, and the US.
So dirty energy, Jason, I'd like to bring you into this conversation, not because I think you're an ESCOM or a fossil fuel expert, but that's the dilemma, isn't it? South Africa and many African nations still have at least 40 years of coal reserves left. That's something that can be tapped into. We're told it's cheap to do it, it can create jobs quickly, and now we're on a climate agenda. So what must Africa do with all these natural mineral endowments?
So if I just think here in South Africa, I think the government and, the IPP program, the REAP program, is starting to now procure clean energy from independent power producers, and with a specific emphasis around wind and solar. If I think about the product or the fruits of and the benefits of what that's yielded to thus far, I think it's around 6,400 megawatts of electricity that we've procured from those IPPs. But the cost is immense. I mean, the investment needed, debt as well as equity, to actually generate that result was 250 billion. And already now, with the coming from the IRP, the Integrated Resource Plan, towards the REAP program, we'd like to even push that further to 13,200 megawatts by 2030. So already you can see there's a funding gap that we need to close, and close very quickly. And we can unpack how the financial industry is assisting with all that.
That's not far enough. A cheap system. Loretta, I haven't known you for very long, but you don't strike me as somebody who, when you're making an important investment that's going to last for the rest of your life and for your children's lives, you would invest in a cheap investment. It doesn't strike me as being something that you do. And nor should it be something that Africa does. We should not be investing in a cheap
But this
solution.
is about competitive advantages. This is about using what you have. And if African countries have these fossil fuels, can't they have an energy mix like South Africa currently has?
We will end up
So
investing
if
in
I
stranded
might-
assets. Stranded assets. And that's not going to be
Indeed.
good for anybody. Sorry, yes, Ramis.
If I might, no problem. I would say South Africa also has some of the best sun on planet Earth and some of the best wind speeds on planet Earth. The coal is what it is, but it's the coal power plants that burn them are an old technology. It's not very efficient. A lot of that energy in coal just doesn't even get used. But South Africa has the power to build a modern energy system with a backbone of solar and wind and some other things being used as well, that is one of the cheapest on planet Earth because of your abundant natural resource of sunlight and good wind speeds. And that, I know that unemployment is top of mind and cheap energy doesn't fix unemployment by itself, but that combined with other efforts in job training and so on has the potential to attract industry to South Africa to
Lorata,
create
sorry,
jobs.
If I may move this conversation along, Lucian is quite silent, and I think he needs to help us talk about investment strategies. But before we do that, I'd like to see what our audience thinks about this. And I'm going to put a question to a poll, and I'm going to ask our audience if you could answer this question, and then we can gauge your sentiment on this one. And the question is there investment in climate action? Are there investment opportunities in climate action? Let us know what you think, and then we'll get Dr. Peppelenbos in the Netherlands to start answering a few more questions around where the opportunities and the money lies. And whilst we're waiting for the poll, perhaps go ahead.
Sure. So it's a very complex issue. I think, yes, wind and solar is definitely the focus area within our energy mix in diminishing fossil fuels and going towards wind and solar. But it's a complex issue. Like, for instance, in the Northern Cape, you can provide all of the infrastructure to generate that energy, but the grid and the existing grid isn't there with the capacity to be able to actually, feed it into. So it's also then the issue also then circles around how do we actually upgrade the grid inside the Northern Cape and those other areas to actually accept the capacities to come online. So again, that sort of means that's further investments needed. And things.
Let's just have a look at the results of the poll. Is there investment opportunities in climate action? 87% of our delegates say there is. 3.1% say outright no. And nearly 10% say, I don't know. So are there investment opportunities? Luki and Peppelenbos, help us. Help the 10% to say, I don't know. Where are these opportunities?
Sure. Well, to simplify it, you can say that prior to 2030, there are a couple of areas that are really mature where you can really invest right now today. And those areas will actually help reduce emissions by 50% already. Those areas are renewable energy production, and we already talked about it. And let's be clear, that is in places like South Africa, in Morocco, in Chile, in Costa Rica. Those are the countries that are leading actually in the renewable revolution. Also, electrification of transport. It's booming, it's everywhere. Electrification of some industrial processes. Not all of it is happening now, but a lot can be done already. And finally, all sorts of efficiencies in the system. Our systems are so inefficient. Take food production. 1/3 of all calories that are produced is wasted somewhere in the supply chain. So investments to increase those efficiencies, they pay off immediately. So again, in conclusion, prior to 2030, there's a number of clear areas where we can invest in mitigating climate change, and those will pay off immediately.
So why are investors reluctant to put their money in the space? And I'll explain to you what I mean. It said that the voluntary carbon market currently in 2020 is only valued at $400 million. $400 million with all this conversation about climate change. The investors aren't entirely convinced, it seems.
The big problem here is market failure. We need a good architecture, good policy and regulation for the market to do its work. And climate change has been called the largest market failure of all times. Emissions of carbon is not being priced. Currently, only 20% of emissions worldwide are being priced, and they're being priced at an average world market price of $2 per ton. Now, the real cost of carbon is estimated currently at $60, and it should increase to $100 towards 2030. So the gap in terms of putting a cost to carbon emission is huge. And as long as that is the case, the market will be inefficient.
Right.
Capital will be allocated to polluting activities that will be stranded assets in 10, 15, or 20 years from now. So we need a good market to really unleash the power of investment.
Lucian, I'd like you to just simplify for us and explain to us what the carbon market actually looks like. So my very simplistic understanding is that at the moment, there is a stream that says a big company in the north can pollute in the north. But as a compensation, you can buy land in the south, in Africa somewhere, and start to plant trees in those forests or help a wetland with its conservation efforts. So you can pollute in one side and there's an offset on another side. Is that how it works?
Well, you're right. That is unfortunately a part of the reality of carbon markets today. We certainly hope that will be better regulated, so that we don't create this excuse to continue to emit and then sort of compensate it with forests elsewhere. That's not how carbon markets should work. And luckily, in a large part of the world, it doesn't work like that. Like take Europe, that's the largest carbon market in the world. It's not a voluntary market, it's regulated. So industries are capped in terms of how much they can emit. And if they emit more, they need to buy allowances. Those are priced expensively at $60 per ton. And that allowance is not to compensate forests somewhere else. It's really a cost that comes to your production process, which makes you less competitive to your competitors elsewhere. What you talk about forestation and carbon offsets, that's what we call the voluntary market. That's a much smaller part of the market.
Right.
And this is where efforts are taking place to regulate that in a better way.
Ramiz, I know you're raring to go there, so go ahead.
Well, I would just say if we look at the numbers globally, we see actually a tremendous amount of money being spent on the clean energy transition. The world last year spent more than 500 billion US dollars deploying solar, wind, batteries, and EVs, coming up close to 600 billion. It was the highest amount ever recorded. In Europe, the value of the carbon markets, mostly mandatory markets imposed by the states, is about 270 billion US dollars on top of that 500 billion being spent to deploy solar and wind and batteries and EVs. So the world is moving. We're at $750 billion of private capital going into this industry per year. And so that's going to come to South Africa eventually. And it's going to come to South Africa in a way that I think is pretty attractive, which is that every year solar and wind and batteries get cheaper and cheaper and cheaper. And every year continuing to operate Eskom's coal plants just makes less and less sense. Those plants are stranded assets.
Sorry if I may, I just want to ask a question as well, and I think this goes to the whole issue of the developed world and developing world, and it's become quite a contentious and sensitive issue. And this question's for Lucian. I think going into COP26, I just wanted your sense and view of it. I think you sketched the carbon markets quite well, along with Ramiz. But my question around this, because as you say, there's companies, because Europe is becoming so strict and disciplined in forcing companies to comply with things that they may be uncompetitive, then businesses outside of that who want to export into those markets, I heard there's talk of them levying a border tax or a carbon border tax for that. You know, does that not then also just exacerbate the issue about who shoulders what and the like? I don't know what your view on that is.
Yeah, so the European proposal for a carbon border tax is very contentious, and it raises a strong opposition, not only from developing economies, but also from major trade partners like US and China. Now, the way these conversations go is that this is a proposal for that is to be introduced in many years ahead of us. And you can imagine that the European carbon market, it went up to $60 from say $20 only a year ago, and it will continue to rise because the market becomes scarcer and scarcer in Europe. Now that will impact production prices in Europe, and as a compensation, you have this carbon border tax. Now, we don't have visibility to the power play that is going on there, but this is huge in international political negotiations, and we need to see which way it goes. I have no clue, but this is a real serious issue, and I'm sure it will impact the success of the climate summit.
Gentlemen, there's a lot to talk about, but Guy, I want you to have a say on this issue of how you create a carbon market, where we create the incentives for investors, and also how to de-risk a lot of projects. I think certainly in the South, we're not, you know, companies here aren't as deep-pocketed as, say, companies out there. So they need to know if they're investing in some kind of a carbon-related project, or if they're in a sophisticated financial market around it, what those rates and returns are going to be and how to eliminate the risks in those projects.
Well, maybe on this issue, I should bring up our Deputy Minister of Finance, David Masondo, has been suggesting a debt for climate swap relating to Eskom's debt, which I think is potentially a very, very interesting idea. I mean, it's not exactly a carbon market issue, but you know, in the context of COP26, where we're looking to transform the dirtiest energy system in Africa, namely South Africa. South Africa is the US of Africa, by the way, in terms of its energy production. This debt for climate swap sounds really interesting, but looking at the business community's news reports, they largely are scoffing at it, and I think this is really disappointing. We've got to get behind these sorts of things and which will allow us to transform. But the other issue that I'm concerned about with carbon markets is this idea of planting forests in Africa.
Yeah.
And that is a tremendous risk to a lot of livelihoods in Africa. Yeah. And the plans afoot, and a lot of countries have signed up to planting hundreds of thousands of hectares of trees, mainly invasive eucalyptus from Australia, into beautiful African ecosystems in order to fix carbon. I think this is a devastatingly wrong idea, and it needs to be shelved very, very fast.
Yeah, there was a comment here that came through. I've lost it now, but to paraphrase, it said something like, we are asking people to plant trees for reforestation, and then we're having to use all the water to nurture those trees. You can't win.
It's a terrible idea. You're tying people's livelihoods down for a generation.
Yeah.
Just take it off the table. Let's get rid of it.
All right,
it doesn't help anyway.
Let's continue our conversation. We're talking climate change. It's Critical Conversations brought to you by Sanlam Investments. And climate change, the summers are getting hotter, the winters are getting wilder, tremors in Johannesburg, flooding in Europe, all because of man-made industrial processes. So what we are arguing here is we can all be drivers of a sustainable change, a sustainable future, and we really can do it confidently.
Confidence takes the lead. It says enough is enough. Confidence looks in the mirror and has the courage to say, we can do better, think bigger, look further, and find smart ways to invest in a more sustainable future. So confidence invests in people. It innovates and pushes boundaries. Confidence works hard and harder still to find investment solutions that make a meaningful difference to communities, our planet, and to our future. Confidence has integrity and vision. Confidence looks beyond wealth creation and finds a greater purpose. Confidence inspires a nation to invest in a future for all, a world where we can all flourish, while building a sustainable tomorrow. Because confidence knows a sustainable future is the best long-term investment we can make.
We're discussing climate change and what we can do to be part of the solution. Now, how you invest your money, how you save for the future can really start to actualize a lot of the things that we've been talking about, and Jason Little is going to lead us in this part of the conversation as we discuss how investors are reacting to the issue of climate risk. What are they saying to you in conversations?
So, conversation with clients around climate risk is, along the spectrum, from those that are very alert and vigilant around the subject, to those who are formally educating themselves, to those that are actually setting policy and objectives, to those that are actually implementing and executing. Clients who are on this end of the spectrum, who are implementing and executing, are choosing more of a just transition policy, which is a little bit at odds with the professor, but those guys that sort of just talk to, not being too hard on the handbrake around your energy mix to the detriment of jobs and the economy and the growth that you might sort of forego. But in general, as well, wherever you are along this spectrum, the trajectory is in the right direction, because clients are increasingly understanding the interconnectedness of the issue, the fact that in pursuing these objectives towards climate risk, you are not doing so at the expense of your investment portfolio's performance.
Now, I don't want us to talk about financial products here, but I'd just like to get a sense of the strategy you can pursue. So if you're a retail investor, smaller, more focused, how do you go about planning for the future versus a pension fund that could unlock money to help an ESCOM or to build a wind farm?
So I think even if you are the everyman, as you put it, Lorato, even as a retail investor, some person on the street, you also have a retirement savings product that you're contributing to. And within that as well, we know there were draft amendments around Regulation 28 to actually free up a little bit more allocation towards infrastructure so that clients could, through their retirement funds and the pot of assets there, actually invest in cleaner energy sources, which we need so badly. But in terms of the retail investor in South Africa, the product set is progressing in the right direction. Arguably in the past, the accessibility and the vehicles weren't historically there, but also if you've got an asset manager who's very integrated in their thinking, and you yourself would like to invest in something like a balance fund, then we as an asset manager can expose you to those kinds of strategies on infrastructure and other things that are climate directed.
ESG, it's an acronym, but it's almost like a buzzword now. Everybody's talking about environment, social, and governance. Everybody.
Yes.
But besides talk, tangibly, where are investments going that are directed towards either an environmental imperative or a social imperative?
So, investments are within the South African context are one can't have this conversation without being aligned to our national infrastructure plan. As you know, it's 6.4 trillion rands that's spread across 4 subjects or 4 areas, being clean energy, water, transportation, and ICT, and 70% of that's energy and transportation. So without doubt, being aligned to that national infrastructure plan, where most of our emphasis is also within our own sustainable infrastructure fund, one is going to be focused in those areas.
John North says, are there any investment professionals courageous enough to admit that we have to start considering and experimenting with degrowth scenarios? And then he adds, the debate around electric vehicles and how they'll be powered is a red herring when we all know that overall resource consumption needs to be lowered, etc.
Yeah, look, I think it's a fine line, if I understand the question correctly. I think we need to find a balance behind making sure our economy still grows, and also making sure that we're able to fund these projects. Now, I think within those IPP projects that I mentioned before and that were already underway, they created around 60,000 jobs, measured on a full year basis, full time. They contributed to socio-economic programs to the tune of 1.5 billion rand, plus also ancillary businesses around them, in enterprise and supplier programs and things like that. So I don't think one comes at the expense of the other.
But I mean, he raised degrowth, but why don't we talk about dematerialized growth? We've learned a lot through COVID about how we can work more efficiently. Companies are now learning that people can work from home. We've hugely reduced emissions. Hopefully, we're not going to return after we come out from under the COVID hammer to something that's the same. We can certainly look at dematerialized growth. I'm sure our international colleagues might have something to say about that. But
I'd like to talk about pension funds, Guy, now that you're here in this conversation, and where the incentives are, and also in terms of the rules around, capital allocations that can be made. Where can they go in terms of investing in renewable projects, green projects, new technologies?
Well, I think in South Africa, we've had a very mixed policy signal for more than a decade. And that has really stopped the transformation of our system in its tracks. So we've even seen companies leave the shores of South Africa who were busy investing in this country. And that's, I think, a real indictment on policy uncertainty. So until we get policy certainty in this country, I think it's quite difficult to find the opportunities.
Okay,
The
so
government has got to play its role.
Let's look at international best practice. Lucian, let's bring you back into the conversation. Obviously, pension funds have prescribed assets. There are limitations on where they can go, what they can't do. And then, of course, we've got this context we've been describing of an African economy that's got a lot of fossil fuel endowments that it could tap into, but could also move into the renewable space. So how do you navigate that ground when you're investing people's money?
Yeah, very good question. And so, as an institutional investor, if you're a large player, you of course have a long-term vision for your investments, and you could say that you effectively own a slice of the global economy. Because yes, you are invested, say, in domestic securities, but actually you're active on the global economy. Now, there's one thing very, very clear. The best possible scenario for the global economy for long-term growth and value creation is a swift transition to net zero. So as an investor, you always want to support and accelerate that transition. And that means that you need a clear vision on that transition. In the South African context, that means that, yes, you currently have strong interests invested in the coal-based economy. But you should also have a vision, a generation vision. In 30 years from now, where do we want to be as a country? And what can I do to support that? And that's what we call the just transition. And that's preparing yourself for the future. We need to be forward-looking, not backward-looking.
Ramiz, I just want to use this word. I just want to use it for the sake of using it. Decarbonize. There, I've said it. Okay, now that I've said it, the opportunities of economies that are decarbonized, businesses that do so, that eventually get to these net zero emissions by 2050, those companies in the South, in the developing world, how can they go about it?
Well, I think how you go about it is by taking advantage of these technologies that are making low carbon or zero carbon energy, low carbon, zero carbon transport cheaper and cheaper. Solar, wind, storage, electric vehicles, all of it. And I think there's several reasons to do so. One is even not considering climate change, air pollution in South Africa from fossil fuels kills 45,000 people a year. It's like one of the biggest killers in South Africa, and that's all coal and oil. So that's a benefit that you could see immediately. You see cleaning up the smog and making South Africa more livable and literally having less death on your hands. But I think another reason is that what's going to happen is that consumer brands and nations in Europe are going to create their own standards saying this product is going to be clean. That carbon border tax adjustment we were talking about, it's one thing, but it's really just a special case of something else, which is if you're Nike or if you're Google or if you're another global consumer brand, what you know, what you've learned this last 5 years is that your customers want you to be clean. So all of these companies have committed to getting 100% of their electricity from clean sources.
Right.
And you're going to see them making more and more aggressive commitments about the food supplies, anything agriculturally grown that they source, about where the water comes from, and about the impacts of that.
Right.
And that's going to put pressure out on their suppliers and make any country that can host them, that can provide low cost and sustainable services, look like a very appealing place to locate.
There is a question here from an anonymous attendee. Do you think that sustainable investing is more important to developed market investors than it is to investors in the developing markets? And whether or not it's important to them both equally is not really the issue. But if this is such a big opportunity for Africa, why is there not more of an impetus from regional bodies like the AU, SADC, to do something dramatic, something ambitious, to create opportunities for investors?
It's the policy certainty problem. It's the lack of understanding of the big opportunity and the awareness of the endowment of our natural resources, of our solar and wind energy. I think that's a tremendous disadvantage that we're under, and we need to wake up very, very fast to that opportunity. I also want to point out that when you shift the world's energy system to renewables, you change the economic system in a very fundamental way, because for the last several decades, the economic system operates under a mode of scarcity, energy scarcity, and power is held in the hands of those who supply energy. Once you open up that energy system, you change that scarcity. It becomes abundant. Energy becomes abundant. Then you've got a very different problem. You've got different problems of too much growth and too much energy. But those are the kind of problems, it's a much better problem to have than a problem of energy scarcity.
And I don't want to belabor the point. Go ahead, Jason, and I'm going to add this question because it's for you. It says, as a huge institutional investor, Sanlam has an enormous power to push climate action in corporate South Africa. What are you doing to get the rest of corporate South Africa to start moving in this direction? What can you do?
So that was actually part of the answer I was about to give. So I think it was very prescient that you posed it. So I think that it's important to point out that regulators have sketched their expectations for, asset custodians and pension fund trustees and the expectations around how they expect all of these assets to really have embedded in them ESG or a strong consideration of all of those different factors when you're actually making a decision to buy an instrument or to hold an instrument. These kinds of considerations are extremely material to ensure the long-term wealth creation around this. Now, absolutely, within Sanlam Investments as an asset manager, it's important that we have a robust investment process, that we have an investment process that is completely ESG integrated, where we take into account aspects of how these financially material factors affect the risk and valuation multiples of stocks, or that we score correctly, or that we have proper oversight or exercise active ownership and stewardship and and company engagement. So to the businesses where we do have a shareholding, we'd like to influence them towards better practice, towards the outcomes of net zero over the long term on behalf of our clients.
So what I'd like us to do now is stop whinging, stop whining, and start problem solving. Let's talk about resilience. And I know this is something you're quite passionate about, Ramiz Naam, and I'd like to draw on your knowledge of the many innovations that are out there that exist right now that perhaps we can look to as the future we can reimagine. How do nations build resilience?
It's a fine question, and I'd say I'm glad that you think I'm so optimistic, but this is an area where we're still learning. And I think the good news for South Africa is that what we've seen happening in Europe, in the US, with the fires in the US, with the fires and floods in Europe, with the flooding in China, has pushed all of these nations to really start thinking about how to deploy resilience and how to deal with that. And that in turn should lead to solutions that are lower priced and that are more available in the developing world. But I want to make a hard statement, which is a lot of resilience work takes capital. A lot of it is very much in one's self-interest. When you see a flood happen, you don't want that flood to happen again. A lot of it just takes capital to avoid that. And that can be challenging for the global south. But not all of it takes a huge amount of capital. A lot of it is smart. I'll give you one example. In issues of flooding, one of the things that we find is people want to build concrete berms to keep out floodwaters. It turns out that if you rebuild wetlands that were once there, you plant water plants, you can do so at a fraction of the cost. You can add the same amount of flood protection, and you get an increase of wildlife and biodiversity and filtering pollution and so on. So there are ways to be proactive and think about how to do resilience in a way that doesn't break the bank.
I just want to list a few examples, Ramiz, and if you could just answer me very briefly on each one. Hydrogen said to be the key innovation that can be incorporated in big industry, heavy industries like mining. Is that the fuel of the future, as it were?
The table is still out. Hydrogen has uses in some places, but it's not yet a silver bullet, and a lot depends on it coming in and cost a lot.
Okay, solar. You've mentioned solar. Guys mentioned solar. South Africa's got lots and lots of solar. Johan de Villiers says, what's going to happen with the tons and tons of panels that reach the end of their productivity within 10 years? So if we start incorporating solar, does that not have certainly a technical expiry date, even if the sun shines forever, but the infrastructure around it?
An average solar facility lasts 25 to 30 years. The total volume of all solar panels that have reached end of life is less than 1% of the volume of tin we recycle each year. So the reason we don't have a robust recycling industry for solar is there just hasn't been a scale yet where it makes sense, but we will get there.
Could fusion reactors not conceivably solve the dirty energy problem within the next decade? That's a question from D.B. Williams.
It's possible, but they've been a decade away for the last 50 years. So I'm more optimistic about fusion now than at any point in my life. There's so many fusion startups, but it's still incredibly hard to know when they'll be available and cheap, which is actually more important than just available.
An anonymous attendee says China is a significant contributor to the climate change problem. Does the investment industry dare challenge the dragon in the room? And the issue here, I think, is an important one. China's quickly become a very key investment player across Pan-African markets. They've built a lot of infrastructure in many frontier markets. And although they're changing their tack, and saying they're going to play a more developmental role, they're going to do more issues around governance. But what is the responsibility as African countries seek opportunities in China and the East?
I think China, even as it's working to, not as succeeded, but working to shut down the growth of its own coal sector, China's been going all around Africa and Southeast Asia and offering to finance coal power plants. And I think that's a little two-sided. if you will. I don't think that's good behavior, and I think they can make something look very attractive while ignoring the benefits of solar wind. It's no different than what you saw really with Russia offering to fund so many nuclear power plants in South Africa not so many years ago. And ultimately, the sober analysis showed that just was a terrible deal and not to take it. And I think I see that tide turning across Africa and Southeast Asia with China's coal offerings as well.
Okay, Ramiz, another one from me before we open it to the panel. Food systems. 60 to 70% of people living in rural Africa in particular produce their own food. They're subsistence farmers. There's a lot of land that hasn't been cultivated on the African continent. And when there's this huge opportunity on the precipice for agriculture, now we're faced with all these adverse phenomenon, droughts, flooding. What are some of the mitigation strategies, the solutions that can be pursued for Africa's farmers, who effectively are the bedrock of so many communities on the continent?
I think farmers are the front line of climate change globally. And because you have challenges in the US, if a crop fails, well, if the rains fail, you have irrigation. If the irrigation fails, you have federal crop insurance. If all of that fails for some reason, the US is still a food surplus producer. You just don't feel it. In many countries in the global south, that's not the case at all. So I think farmers are going to have to think carefully about experimenting with new crops that might do better in the new temperature ranges and new precipitation regions. I think we're going to see more and more, hopefully, as biotechnology accelerates, we'll see more options for crops that are better tuned. But Africa politically is going to have to decide, will it accept these GM crops if really all they're doing is just making a version of a crop that grows better in the new climate?
Maybe I can say something about Africa's agriculture. Sub-Saharan Africa's growth in agricultural production is the highest in the world over the last decade, about 4.3% versus a global average of 2.5%. So this area is getting much better at producing food. 75% of that, though, is due to increased cropping area, only 25% due to productivity. So that system isn't sustainable. So we've got to be careful about that. Many of our meat production systems in the subcontinent are entirely sustainable. I mean, what else are you going to produce on hundreds of thousands of hectares of Karoo shrubland? You're not going to plant crops there, but you can produce meat sustainably.
Lucian, I'd like to bring you in here, and this time not as an ESG climate strategist, this time as a citizen of the Netherlands. The Netherlands apparently is now the #2 largest fruit producer in the world. This little country has innovated so incredibly in the space of agriculture and agricultural tech. What are some of the things that we can learn, I think, as the Global South in terms of improving efficiencies and still going green in terms of fruit production systems that can be deployed going forward?
Yeah, it's an incredible success story, and actually, when you take one step back in the 80s, our agricultural system was so much characterized by pollution, nitrogen leakage, and the product quality was really poor. Our tomatoes were called water bumps by our largest export market, the Germans, and nowadays our production of tomato, paprika, cucumber, fruits, all of that is highly efficient. It's nearly all organic, and that's all technology based. And the secret of success is the collaboration behind the scenes between the sector, the farmers, and universities. That's what drives innovation. And I'm sure in places like South Africa, where you have an abundant climate for agriculture production, you can do the same.
Right. Jason, innovation, what does it mean in a South African context? I know that you're very passionate about this very key issue of unemployment in the country. As we innovate, how do we make sure we keep absorbing, especially young South Africans, into new systems?
It's an incredibly important issue. For me, it always starts with education as well. But in to really get to the nub of this and to really have the best chance of success, you really need to draw on the United Nations Sustainable Development Goal number 17, which is around partnerships. And within Sanlam Investments, whether that partnership is with climate fund managers, which we've spoken about in the previous critical conversation, or whether it's our partnership with Robeco, which forges better investment decision making with a leading global player out there, or whether it is also being able to leverage off the might of the Sanlam balance sheet to be able to free up investment into these areas. The interconnectedness of all of these issues are going to help guide a youth towards better employment if you actually invest in these renewables in a very meaningful way with patient capital.
Professor, I'd like you to be an artist now and just give us a storyboard, a picture board of what the future could look like if it was reimagined. If you were sitting with the president today and said, rewrite the script, redraw the landscape, what would it look like if South Africa was a little bit more progressive?
We could offer such hope to the young generations of this country if we took full advantage of the natural endowments that we have and didn't stick with the old stuck ideas that we seem to be stuck with. So I would see an energy system that was democratized, was spread across the country. I'd see a renewal of those hundreds of little towns in the Karoo that have lost their economies, because those are the areas where we would generate an enormous amount of renewable energy. Sustainable electrified transport system. Imagine driving an electric car, which has only got about 5 moving parts. It's so easy to maintain off a solar system that you may even have on your own roof. You don't even have to go and fill your own car up. You know, the personal freedom that comes with these sorts of systems is quite phenomenal. So you offer a future of abundance to the next generation, and it's sustainable abundance, which I think would be a totally extraordinary thing to be able to offer.
All right, let's go through a few questions that are coming through. Rami's, nuclear energy is considered a zero-emission clean energy source. Dilemma, the fuel required is not. How do you work around this dilemma? Could we still consider nuclear if the fuel sources were cleaner? And if not, why is South Africa still looking to invest in it?
Nuclear is clean, safe baseload power, especially with modern reactors, even with the use of uranium. And there's other technologies like using thorium that makes it even safer. But even with uranium, with a modern reactor, it's quite safe. The challenge is that nuclear reactors have been going up in cost over time, not down. And so in some parts of the world that don't have good sun or good wind, nuclear makes a lot of sense as a clean energy. In South Africa, with how amazing the sunlight and the wind resources are, it makes very little economic sense.
DJJ says, Lucian, there has been talk of the potential to repurpose funds generated through the carbon border adjustment mechanism to provide funding for mitigation measures in developing countries through the Green Fund, among other mechanisms. Do you think initiatives such as this will make the CBAM less contentious and more acceptable? And what are the merits of these kinds of international proposals?
Well, a cornerstone of the Paris Agreement is international finance flows from developed economies to emerging economies. It is fundamental. It is part of what they call the fair share, and what we discussed earlier, that historically industrialized countries are responsible for most emissions. Now, there's a concrete number that has been put to it, 100 billion per year by 2020. And we're not close to that. We don't even know how to measure it. But it is critical, and in fact, besides the carbon border tax, it's one of those most contentious elements in the negotiations this year. And if developed countries don't live up to that promise, it's a sort of it may jeopardize, say, the negotiations altogether. So it is critical that 100 billion a year.
A question here from Beatrice Watermeyer. As you say, there are so many things that South Africa could do to lead the change. What are we doing to present to COP26 in November? Who's leading it, Guy?
Well, South Africa has been involved in these negotiations for many years. We've got a very experienced team, and I'm sure that they've got a large number of items on their agenda that they'll be pursuing. I'd raise again the issue of the debt for swap with Eskom, the debt for climate swap that Eskom has on offer, which I think sounds like a really good idea. But I'm sure there are many others as well.
Jason, a question. Could you tell us a little bit about the relationship that Sanlam Investments has with climate fund managers? And in the context of those relationships, what kinds of innovations are you driving?
Thanks, Lorato. So the relationship that Sanlam has with climate fund managers is that we're part owner along with the Dutch Development Bank, FMO. And climate fund managers is really leading the world in terms of blended finance. So a whole, pooling a whole group of investors with a whole spectrum of investment needs, including development finance institutions, institutional investors, et cetera. And on the continent of Africa, Asia, with the country being India as well as the Far East, they are spearheading investment into renewable projects, focusing also once again on wind and solar with, targeted objectives that are very ambitious. I think just more than 700,000 megawatts of electrical generation capacity that they would like to produce, which I think is also equivalent, or the carbon dioxide equivalent of something like more than 800,000 tons of carbon dioxide, which is the global warming equivalent, affecting more than 1.9 million people. So there clearly is the scale play on Africa as well as in developing nations that Sanlam's really spearheading. But not to be remiss about what's happening closer to home and the work we're doing with our infrastructure fund, with the key focus of funding renewables there. Sanlam themselves will be committing 6 billion rand of its own money. We've already secured an initial commitment of 500 million. So we really are attracting third-party investors also to accompany us with along this journey.
Ramiz, I'm going to paraphrase a bunch of questions that have come through, and the focus is really about the oceans, right? Basically, the view is that 70% of the Earth's surface is water. The water has a lot of oxygen, says one of the, is the biggest producer of oxygen, says this one question. And the argument is, whilst we're focusing on solar, on wind, we're not talking enough about saving the oceans, saving the ecosystems, marine ecosystems, and turning our attentions to that life source in the oceans.
Well, I very much agree with those comments in that we do have a huge problem in the oceans. Whoever wrote that is correct. Phytoplankton in the ocean are responsible for most of the oxygen we breathe, not plants on land. So far, they're doing okay. But what's not doing okay are coral reefs. And coral reefs are the rainforests of the sea. They house more than half the biodiversity in the oceans. A lot of fish species, their young nurse on coral reefs. And we're in a situation where by the end of the century, they could be almost gone. So in addition to the work that we have to do to mitigate, to stop putting carbon in the air, so we stop heating things up, there's probably work we have to do to, we can start by doing a better job regulating international fishing, where we overfish tremendously, and maybe looking at ways to actually proactively help coral reefs survive.
Guy, back into the South African context, surely the IRP is Integrated Resource Plan is out of date. Now that talk has shifted to net zero emissions by 2050, South Africa needs a brand new perspective. Any ideas what those could be?
Oh, that's an extremely contentious issue. Yeah, as I say, policy certainty is urgently required. I do think that an updated IRP would make a lot of sense, but politically, let's see how that plays out. I do just want to quickly come back on the of running further risk along these lines.
Okay, gentlemen, there's been a lot to consider. It's a complicated topic. It's a little bit contentious. And, you know, so much information can be confusing. So to synthesize what's been said here, to focus people's minds, whether it's on the investment side, the social and ecology side, the innovation side, what are the final thoughts you'd like to leave our audience with, you'd like to leave me with? Lucian, we'll start with you. What is the thing that needs to be foremost to mind?
Well, I'd like to emphasize what I said before. The biggest risk is not seeing the opportunity. The low carbon economy is inevitable. Sooner or later, it will happen. So we need to be forward looking, not backward looking.
Ramiz?
I'd say one that we are not headed for an apocalypse if we make smart decisions. We can turn this around, and as we have environmental challenges in the past, and that for South Africa, a lot of these clean technologies are not just about solving climate, they're about cheaper energy, cleaner air and water, fewer deaths from air pollution, and possibly creating jobs.
Jason?
So I would just say that for anyone watching, especially the South African audience, is to just think about things very holistically. You know, when you're pursuing your environment and your social objectives, to recognize the interconnectedness of them all as well. And so, you know, when you are actually, not to be remiss about your climate issues, because they so easily can unfold in widening social outcomes and gaps when it comes to healthcare and technology and various other programs. So just to think about things very holistically when you're thinking about those strategies to either risk mitigate in your portfolios or to actually find the opportunities as well.
Guy?
Well, I'd say, especially for people of my generation, let's offer the young people, the next generations, something that they will thank us for, not something that they will curse us for.
And I'm glad you mentioned the younger generation, because ultimately, you know, we can talk about corporates, sovereigns, governments, but what is the behavior that an individual can pursue, the mindset that an individual can pursue to start to change the world around you? Ramiz?
I think the biggest way most individuals can have an impact is to act politically. And that's a combination of educating themselves, communicating with their friends and family, and really advocating for change that focuses on climate and other environmental issues.
At a personal level, Lucian, what can people do to build that consciousness?
Talk to your own children. Your kids understand what's at stake here. And if you can't explain what you're doing to your kids, then you're probably doing something wrong.
Jason?
Sure, absolutely. For me, I'm a great believer in the individual, and for me, it all starts with education. But also then, once you are educated, to find your voice somewhere inside your community, and I think it all starts there.
Guy?
Yeah, I think one needs to be as consistent as possible. I agree. Talk to your kids. I teach students, and be aware and be consistent and stick to the message.
Okay, we've still got many comments and questions that are coming through. I'll just read some of them to you just for you to process. If you feel strongly that there's something you want to answer, then you can do so as we start to wind down the conversation as well. What are your thoughts around climate change, likely impact on pricing and financial assets? That's a real issue that people want to know in terms of pricing of these assets. The China question came up. I love something I read on social media, gentlemen, which said yesterday, you want to use paper straws to save the fish, whereas in fact you should just stop eating the fish. So I have to say, Ramiz, the paper straw is a particular pet hate of mine. And I wonder, actually, let me ask that question. I mean, if plastics used for plastic straws are literally 0.025% of the overall plastic used, are we not making these cosmetic interventions like stop using a plastic straw for a paper straw when we could be doing something a little bit more significant?
It is a feel-good kind of intervention that has minimal impact. Does that reduce people's urge to do more important things? I don't know. I think the verdict is out on that.
Who guards the guardians, says someone. A select retailer forces us to purchase their reusable bags. W, that's all I'm going to say. Yet they import fruits from Spain. That is surely a contradiction of the carbon footprint issue. And other comments coming through. Renewable energy does not create jobs. I know you don't agree with that.
That's false.
We invested in renewables, not aware of these jobs. We already got millions of people unemployed. I am for alternate, but half truths are not going to help.
I don't see how that translates.
But I think the simple issue here is you've got wind farms in Caledon and Southern Cape, etc. Right. But you've got 44% unemployment. The two things don't match. If you're making these investments in these renewable spaces, it should be creating jobs, but we keep on having a regression.
Well, we hardly started to invest in wind farms. We could have been employing thousands of people, hundreds of thousands of people in renewables by now, if we'd continued the trajectory. We just brought it to a halt. So no, we haven't run that experiment correctly, and it's very clear that we can create many jobs that way.
I think based on what we've procured from independent power producers, the 6,400 megawatts that we procured thus far, it's created about 60,000 jobs. But again, it's not nearly enough. But our ambitions are actually scaling up a lot more, and it is becoming a funding issue now, which we should be able to solve for. And I think there we can scale up the impact inside our communities.
Remember earlier on I said ESG is become a kind of a buzzword. So Jay agrees and says it's definitely a buzzword with a lot of people using ESG as a greenwashing tool.
Yes.
How do you address this issue by adopting very clear definitions and criteria for what can be considered ESG and green investments, and what role can the government play? Example, SA's Green Finance Taxonomy project with the National Treasury.
That's a very good question. I think I'll speak from an asset manager's perspective. We're very aware that a lot of the market looks at us sometimes skeptically when we market and things like that, and it's very important for us to do so in a very responsible way. But the important part that as an asset manager, what we've also done is that we create a governance function, which recognizes that we have to deliver to a whole group of stakeholders, clients, employees, shareholders, and we need to actually have a governance function that makes sure that we adhere to those standards and we market responsibly. Right. So it's important that we address this not cosmetically, but substantively.
Right. Yeah. The smartest question to come on this entire forum today is from Carol Green. She says, fantastic webinar. Hey guys. Thank you. And Lerato, you're an excellent host. We can just shut it down right there. But actually, her question is, can you please also explain climate attribution science? Can somebody explain climate attribution science? And Carol says, my understanding is that it's an important breakthrough in convincing people that climate change is real.
Well, very simply, it's a science of attributing how much of an event is due to climate change and how much of it is natural. And the statistics around this are, as you can imagine, pretty complicated. But it's becoming more and more, refined, and it's leaving less and less wiggle room for those who wish to deny the impacts of this trend.
Okay, and finally, Lucian, there are a few questions here coming through around the pricing of assets, decarbonization going forward, and the incentives that are needed. So could you just give us a sense of how to go about understanding the numbers, even if the pricing hasn't really come to the fore, but just how people can make sense of financial instruments going forward?
Well, you're saying the pricing hasn't happened yet, but actually it has. That train has already left the station long time ago. If you follow the weight of energy stocks and utility stocks in the market, it has come down in the last 10 years from 15% of the global market to only 6% of the global market. Now imagine, that is billions and billions and billions of market capitalization that is lost. And along with that, thousands, tens of thousands of jobs. Only last year already, the oil and gas industry announced to cut jobs. Around 20,000 jobs have been cut. At the same time, renewable energy companies have grown in size and market capitalization and have surpassed those traditional dinosaur companies. So pricing of assets has already left the station a long time ago. And it's really a choice.
Right.
Which train do you want to jump on? I think it's very clear.
Right. Okay, we've come to the end of our conversation. I want, in a word, yes or no or maybe, Lucian, should we be worried about the future because of climate change?
Yes, if we don't take the opportunities.
Should we worry, Ramiz?
Yes, and we should act.
Jason?
I always worry, so yes.
And Guy?
Yes, it's the biggest challenge facing humanity.
Gentlemen, it's been wonderful hosting you in this critical conversation. It's been insightful. It's been an education. Many myths have been put to you. Many myths have been debunked, and a lot of clarification of issues that have been confusing. So thank you very much for your time, Lucian Peppelenbos from Robeco in the Netherlands. Thank you very much for your time, Ramiz Naam from Singularity University from the west coast of the United States. Thanks to you, Jason Little, the head of institutional at Sanlam Investments, and thanks to you, Professor Guy Midgley from the University of Stellenbosch, joining us in your personal capacity, but it's been a fantastic conversation. I'd like to quote the Kenyan environmentalist and Nobel laureate, a woman I've met and who has inspired so much of my approaches to the African continent. 25 years ago, she sounded the alarm. She sounded the clarion call. And many people ignored her. In fact, in some cases, they ridiculed her. But the deforestation, the droughts, the warmer temperatures we're seeing on the African continent, those realities are upon us now, nearly 30 years later. We've seen snow on the Sahara, fires in southern Europe, flooding in northern Europe, tremors in Johannesburg, cyclones in Mozambique. And I'm talking about events that happened in the last 10 months alone. So, you can be part of the solution, I can be part of the solution, but time is of essence. And it's about building better ecosystems for biodiversity. It's about investing better and smartly. And as they say, it's about having conversations amongst ourselves and with our children. This is not a question of intellect now. It's an issue of our intrinsic survival as a human race in the world over. And more importantly, it would give us the opportunity to allow our planet time to replenish and heal. So let's all be part of that constructive change. I want to thank you, our audience, for joining this critical conversation. I want to thank you for your interesting and informed questions that we were able to pose and that got us thinking. Remember, you can continue the conversation on #CriticalConversations. Remember to tag us at Sanlam Invest. And I look forward to seeing you all on the 15th of November when we have our third installment of Critical Conversations. Our topic is going to be the future of sustainability. This has been none other than the Critical Conversations brought to you by Sanlam Investments.
We need to talk.
It would be safe to say in the investment world, change isn't coming. It's already here.
The world has been galvanized into action. What can we do to contribute to a more equitable society?
The future belongs to those who adapt, those who identify shortcomings and unlock value.
A quantum leap was necessary.
I think you understate the situation. It isn't necessary. It's essential if we're to build any kind of a future.
We have to ask ourselves, what can we do to invest in the right places, for the right reasons? Not because it's the right thing to do, but because it's the only thing to do.